What if I told you that every day your money is quietly losing its value? The prices of things keep going up, but your savings just sit there, worth less and less over time. It's like running a race against inflation, and guess what? Inflation is winning. The real question is, are you doing something to fight back? The problem. Inflation isn't just some fancy economic term. It's the slow but steady rise in prices over time, and it directly affects what you can buy with your money. Think about it. A cup of coffee that used to cost $1 now costs almost $3 or $4. That's inflation. And it doesn't stop there. Over time, inflation makes everything more expensive, from groceries to gas to homes. Here's the kicker. Inflation averages about 2 to 3% per year. So if your money is sitting in a bank account earning 0.5% interest, you're actually losing money. Crazy, right? The reality is, we need to make our money grow just to keep up with inflation. That's where investing comes in. The solution? Investing. Investing is your ticket to not just keeping up with inflation, but actually growing your wealth. And here's the good news. It's not as complicated as you might think. Let's explore some options to fit different comfort levels. Stocks. Owning stocks means you own a piece of a company. When the company does well, so does your investment. Stocks can be risky, but they offer the highest potential returns. Over the long run, stocks have consistently outperformed other types of investments. Historically, the U.S. stock market has delivered an average annual return of around 7 to 10%, even after accounting for inflation. Bonds. Think of bonds as loans you give to companies or governments. In return, they pay you interest. While they tend to have lower returns than stocks, they're also less risky. They're a great option for balancing out a portfolio that might be heavy in stocks. Mutual funds and ETFs. These are collections of various stocks, bonds, or other assets bundled together. They offer instant diversification and are managed by professionals. It's like having a team of experts working to grow your money. Great for beginners who don't want to spend hours researching individual stocks. Real estate. Investing in property can be another way to hedge against inflation. Real estate typically appreciates over time, plus you can earn rental income. Even if the property market slows down, the value of land and property tends to increase in the long term. Here's the best strategy: diversify. Don't put all your money into one type of investment. Spread it out across different assets to manage risk. If one type of investment takes a hit, others might still be doing well, balancing things out. The Dow Jones Industrial Average, DJIA. Let's focus on one of the most famous tools investors use, the Dow Jones Industrial Average, DJIA. It's like the granddaddy of stock indexes, tracking 30 of the biggest companies in the US. If these companies are doing well, it usually means the economy is in good shape. Since the DJIA started in 1896, its average annual return has hovered around 5 to 7%, even accounting for inflation. But let's break this down further. Last 30 years, the Dow has averaged an annual return of around 8 to 10%. That's solid growth, enough to outpace inflation significantly. Last 50 years, we're looking at an annual return of approximately 7 to 9%. Over this time frame, it captures the economic ups and downs, yet still shows a robust growth rate. Last 75 years. The long-term perspective? About a 7% annual return. This showcases the stock market's resilience, even through major events like recessions and wars. The Dow Jones serves as a testament to the power of long-term investing. The longer you stay invested, the better your chances of seeing substantial returns. Investment scenarios. Let's make this real with some numbers. What if you had invested $10,000 in the Dow 30 years ago? Today, that investment could be worth around $100,000. That's right, 100 grand, thanks to the magic of compounding. Now imagine investing that same $10,000 50 years ago. That initial investment could have grown to over $500,000. That's the potential of long-term investing. The best part? You don't need to be a financial wizard. You just need time and a bit of discipline. Why does this work? It's all about compounding. When your investments earn returns, those returns start earning returns of their own. It's like a snowball rolling down a hill, growing bigger and faster with each rotation. Actionable steps. So, how do you get started? Here's the best part. You don't need a ton of money. Start small, but start now. Whether it's $50 a month into an index fund or a few $100s into a diverse portfolio of stocks, every bit counts. Investing can seem overwhelming, but remember, there are financial advisors, robo-advisors, and tons of resources to guide you. The earlier you start, the more time you give your money to grow. The worst thing you can do is wait for the perfect time to invest because, spoiler alert, there isn't one. Your money is losing value as we speak. Investing is your tool to fight back and build a future where your goals buying a home, funding education, retiring comfortably are within reach. Ready to take charge? Comment below with your thoughts, share this video, and don't forget to subscribe and hit the bell icon for more wealth-building tips.